Well, hello everybody. Steven Sitkowski here. Welcome to my Market Insights. We certainly have a whole lot to talk about. So let's get to it. And it's kind of a mixed bag. I've got some good things to report and some not so good things to report. Kind of like life, I suspect. It is May the 4th. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. So what's moving the markets? Well, the Russell 2000 hit an all-time high this morning. Well, that was the good news. If you're not familiar, the Russell 2000 is an index consisting of 2,000 small cap stocks. This is also known as a proxy for the US economy. This blew me away. First quarter earnings are expected to grow 25%. So we're kind of wrapping up the earnings season. So most have reported at this point, and that is pretty good indication of the health of this economy, which has been unbelievably resilient, especially in light of what's going on. Well, no apparent progress in the Iranian conflict. In fact, it was reported today by the UAE that they've intercepted some missiles headed their way from Iran for the first time since the ceasefire, the quote unquote ceasefire. So that has triggered a whole bunch of stuff, none of which is good. I'll be so glad when and if this ever gets behind us and life goes more back to normal. 10-year Treasury is slightly higher at 4.412. And oil, and I'm guessing this is even higher now. Yeah, oil's at 105.36. So 45 minutes ago it was at 102.16. That's above 105. It's amazing how that happens. There's a direct correlation between tensions in the Middle East and tensions at the gas pump. So that's what we're all dealing with. Market breadth last week was actually pretty darn good. You look at advancers versus decliners on the New York Stock Exchange, that was strong. We look at 52-week highs versus 52-week lows, 317 to 80. Fantastic. How about on the NASDAQ? 2,700 advancers, 2,400 decliners, 651 stocks hit new highs, 340 hit new lows. So, market breadth last week, not bad. And the winners are CBOE, Chicago Board Options Exchange, was up 9%. For the week, SanDisk just keeps ripping. Seagate Technology up about 8%. Oracle up. Datadog, Intel. It was a nice week. This is last week's heat map. So, kind of what you see is a bit of a mixed bag, more green than red. Couple of reds that sort of stand out for the week. Nvidia down 4.71%, Microsoft 2.4. On earnings, you had Meta down almost 10% on the week, but also on earnings. Alphabet, formerly known as Google, up 12%. Apple, almost 3.5%. So those were both really encouraging. Um, Oil, of course, did well. Industrials overall did well. So not a, if you're not Meta, if you're not semiconductors, it pulled back a little bit. Um, or Nvidia, you probably had a good week. Future earnings look really strong. So they're going to have to revise the first quarter. Um, they had it at 15%. Then they've got it for the second quarter moving up to 20, 21, 20. That is spectacular. Again, especially in light of what's going on. And as earnings go, so go stock prices traditionally. What's a company worth? Some multiple of its earnings. So if earnings are moving higher, typically it's driving stock prices higher. And we got room to run in this bull market. So we're up about 100% since we bottomed out in October of 2022. The average bull market brings prices higher by 192%. So we got a chance that this bull could keep going if we could get some settlement with Iran. You'd see this market shoot up almost instantly. Kind of a high level look at a couple of things. Median S&P 500 stock distance below its 52-week high. So healthcare, I mean, those stocks are lagging. Consumer discretionary is way off of their highs. Communication services, staples, materials, S&P 500 13%. Most of the energy and utility companies are right up against their 52-week highs. And U.S. equity return since the start of the war in Iran, semiconductors, they've done fantastic, up 30%. Tech is up 13%. Communication is up 10%. Energy up 6%, and so forth. Forward PEs let me be able to blow this up for a little bit. So these are semiconductor stocks. Not all of them are super expensive. Um, SK, when you look at the forward PE is 4.3. I mean, that's a very low PE and a very low PEG. There could be a lot of value in that. Samsung, 5.1%. Micron, 5 or not percent, 5.1. Micron, 5.4. And after that, things tend to normalize. Look at NVIDIA. NVIDIA um, has a forward PE of 17.5 and its next year's earning per share growth of 34. That gives it a PEG of 0.50. A PEG of under 2 is considered, really good value for the investment dollar. So some of these stocks, they definitely have room to run. There's no question about that. Market sentiment, you see something here. Kind of hang on just a second. I'll go back. There we go. Um, so market sentiment it's taken a step backwards from the last week. Um, Let me move this over so you can actually see the dates. There we go. That looks more better. So on the 22nd of April, 46% of respondents were bullish for the next 6 months. On the 29th, it was 38%. And this is before what just happened. So I suspect next week could be even lower depending on what happens. I'm telling you, friends, news-driven markets, those are the toughest ones. Fear greed index, still right in the middle of greed. So people are feeling pretty good about things, and that's a day-to-day measure. Future of interest rates, yeah, the thought of a rate cut, forget about it. Um, as of right now, they're forecasting the next rate cut December of 2027. So this is going to have to be an earnings-driven market. It is not going to be led by the Fed. Unless Kevin Warsh comes in, he's supposed to take over May 15th, um, and does something kind of bizarre. I just don't see how, given where oil prices are, where inflation is that they can cut rates anytime soon. So the S&P 500 is up 5.59% year to date. It's probably closer to 5% after this pullback. And you can see the big winner, of course, is energy. But after that, we have industrials and materials and REITs, consumer staples, utilities. The only thing really lagging are financials, which I'm expecting to see go higher, and healthcare. So healthcare is down 6.5%. In terms of earnings this week, most of the biggies have already announced. Palantir after the close today. That could be interesting. AMD after the close on Tuesday. I'm not sure anything else has a potential to move the market or really move their sectors. News this week. Your focus should be on Friday. We've got a lot of big stuff coming out on Friday. The unemployment report expected to come in at 4.3%. Hourly wages expected to have grown month over month, 0.3%, 3.8% for the year. And consumer sentiment is supposed to come in a little lower than it did last week. So we'll see how that pans out. And then every Thursday, we get our initial jobless claims. We had a shockingly low number last week at 189,000. They're forecasting 205,000 for this week. So let's take a look at the charts because the charts say it all. All right, let's look at the SPX. There we go. I mean, generally in pretty good shape. 6 months ago, we were at 6,800. Now we're at about 7,200. Let's look at the intraday. When the news was announced, watch what happened. We fell off a cliff. So maybe they'll form a double bottom down here. By the time you view this, the jury will be in on that. In real time, I'm hoping we're forming a double bottom right there and that we stabilize. The other thing I want to take a look at was the VIX, which is the volatility index on the S&P 500, also known as the fear index. Predictably, it's up 9.5%. So we've moved up to 18.6. That's not bad. Generally, the VIX runs in a range of 13 to 25. So we're a little closer to 13 than we are 25. Nothing yet to hit the panic button over, but of course, always subject to change. So there you have it, our market insights. I'll be back with you next week. Thanks for watching. But until then, be safe, be blessed. Bye for now.